gents. So as a recap, we're looking at credit purchases. Okay, creditor control. We looked at what a creditor was. We said that it's also known as accounts payable. There's creditors control. Okay, accounts payable because it's money that we still need to pay as a company. We looked at the creditors journal. We decided that if you buy something on credits, it goes into a creditors journal. So if you're buying a car on credits, it goes here. If you're buying trading stock on credits, it goes here. If you're buying equipment on credits, it goes into the creditors journal. Anything that you buy as a company on credits or accounts goes into the creditors journal. Okay, we looked at the invoices. We then looked at the first creditors journal. We had 3 transactions that happened. Okay, we then decided out of these transactions that in all the instances you are buying stuff from Sparky and Co for 400 Rand, from Mako and Supplies for 2000 Rand, from Elco Services for 190. But essentially, like with Mako Supplies, you actually bought 1200 Rand worth of equipment and 800 worth of stationery. However, you still owe them 2000 Rand all in all. Okay, so this is a creditors journal where we basically recorded all the stuff that we buy on credits as a business. Okay, so we then let's move on now to the general ledger. We're now posting those final balances that we saw right at the end there over to the general ledger. So the first one that we're going to post is your creditors control. It happened on the 31st of December of January rather. Okay, we call it sundry accounts because it's a mixture of accounts that we've taken from the creditors control. And we've taken it from where? The CJ under your folio, and it was 2,590. So if we look at what happened with equipment, okay, we didn't buy this equipment with cash. We bought it with credits, so the money comes from our creditors control. CJ is our folio, 1,200 Rand worth of equipment was bought. The same with trading stock. Bought from credits, therefore our creditors journal goes up and our trading stock goes up 400 Rand. Trading stocks and assets go up on the debit side. Consumable stores is an expense. Expenses go up on the debit side too. And just like with these consumable stores, we bought them on credits. So we got this from our creditors journal, was 190 Rand. Finally, stationery, the same applies. Bought it on credits, therefore creditors control. Okay. CJ is a folio, 800 Rand worth of stationery. Went up on the debit side because stationery is an expense and expenses go up on the debit side. So now you've seen, gentlemen, how to post a general ledger. There are, however, 3 ways you can pay back. So now we've bought something from people, we want to pay them back. You can either use a check, sign them out a check. We can go deposit money directly into a bank account, or we can do an internet transfer or an EFT. In front of you, you've got the cash payment journal. Okay, it's the same cash payment journal you've seen many times before. However, the only difference is that you've now got this creditors control, which is basically a new column to record payments made to creditor. Okay, so every time we now pay our creditors back, the people we owe money, pay them back, it will go into this creditors control. What do you think the balance is going to happen here when you've got the balance of this creditors control? You'll obviously have to take the balance to your general ledger on the debit side of creditors control, because now creditors control is going down, and if a liability goes down on the debit side, and that will decrease the amount of money you owe other people. But we'll look at that over the next lesson.